Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again James Turk of GoldMoney, and for the first time, Roy Sebag. He's the co-founder and CEO of a newly traded public company named Bitgold. And the reason for having both James and Roy on together is that their companies have chosen to merge, bringing GoldMoney, it's a private company, into Bitgold, as I said, a newly traded company, a public company, that recently went public. It trades under the symbol XAU in Canada, and I'm told, Roy was just telling me before we came on the show, that it will be trading as an ADR very shortly, and then probably soon after that, we'll get a New York Stock Exchange listing. Bitgold has been trading around $4 in Canadian money, and currently 36.6 million shares outstanding. But when the merger of GoldMoney and an 18.25 million financing is completed, then there will be something like 54 million shares outstanding. And once the merger takes place, GoldMoney will retain its identity, it's my understanding anyway, as GoldMoney, but will be a subsidiary of Bitgold. And Roy will continue to be the CEO of Bitgold, and James Turk will join Bitgold, its board of directors, as a member of the board. James certainly is no stranger to this show. He has been a guest several times in the past, and, well, he is well known as a founder of GoldMoney, for sure. That's a company that has several patents for the use of the Internet for gold money transfer payments. And James is a free market gold money advocate, has been a friend of mine for a couple of more decades than I'd like to think of, probably. But for a more thorough biography on James, go to the Voice America, go to this show's webpage at the Voice America website, and you can read more about him if you're not familiar with him, but I doubt many of you would fall into that category. Roy Sebag is, as I mentioned, the CEO of Bitgold, and his name is probably not as familiar, but I'm guessing you're going to be hearing a lot from Roy in the years to come. As I mentioned, he is a co-founder, along with Josh Crum, of Bitgold. Roy has been an active investor, a portfolio manager, a very successful one. Throughout his career, he has correctly predicted important investments and economic themes before they materialized, resulting in in risk-adjusted returns that have significantly outperformed the market indexes. And he is an avid reader of science, history, and economics. So thank you both, James and Roy, for joining me today.
Thanks, Jay.
Thanks for having us, Jay.
Oh, it's great to have both of you. Roy, before we get started, you say that your shares are going to be trading, you think, pretty soon in the U.S., right?
Yeah, I believe the ADR, the American Depository Receipts, will be trading within a few days. That's what we were told by one of the issuing brokers.
All right. I would like to really begin by asking you, Roy, to explain to our listeners what services Bitgold will provide to its clients and how exactly Bitgold will work.
Yeah, well, thanks again for having me and James. So Bitgold is an online platform that allows people to not only use gold for savings, that's one of the use cases, but also to use gold in payments and in transactions. And so anything that you can do with PayPal, you'll be able to do with Bitgold. You can already do a lot today, but by the end of this summer, when we roll out the remaining products that we're going to be rolling out, you'll be able to open an account, fund that account with any source of funding, whether it's a bank account, a credit or debit card. You'll even be able to deposit actual cash through these ATM machines that we've developed. You then have physical, allocated, reserved, redeemable, insured gold bullion, COMEX or LBMA bullion. And then you can actually do the following. You can send the gold to other users for free. You can go into any traditional store, point of sale, or ATM machine and withdraw the gold value or use that gold value in real-world transactions. Or if you're a merchant or a service provider, you can open a Bitgold account with a zero balance, and you can sell your goods and services and products online or offline and earn gold. So you can process those transactions using existing payment rails like a credit card or a bank direct transfer, but you end up earning gold. So the big idea is people can finally peg their labor and services and goods to gold. And for those that are looking to seek access to gold, for the first time or just, learn a little bit more about the volatility of gold, they can use that to open accounts. But the real opportunity is to get people to use gold in payments and transactions.
Okay, so everything will be denominated in the account or in the holding, I guess, in grams of gold, I guess. So, yeah. But they'll be transferred, presumably if a merchant, you're going to use your credit card, for example, that would be then transferred into, the gold will be transferred at that current gold to dollar price, let's say, for the purchase of merchandise.
So yes, the account's always denominated in weights of gold. We deal with 1 kilogram bars or 400 ounce LBMA bars, but our platform, Aurum, fractionalizes each bar, not by reserving, it's not fractional reserve, it simply fractionalizes an individual bar amongst Bitgold users down to as little as 0.01 grams or 3 cents. Now, the system, what's so special about it is it's integrated today into the traditional payment rails. So if you're a merchant and you want to accept a MasterCard, then the person on the other end is just swiping a MasterCard, no different than how they would swipe a MasterCard if you were, using a bank processor like Bank of America or Wells Fargo. But what you would receive in your Bitgold account would be gold grams.
Mm-hmm. Okay. Now, I understand that your services are not available for American, U.S. residents at this time. Is that still true?
That is true for the next, I would say, few weeks. We're getting ready to launch in the United States, and we're working very hard towards announcing that in the coming weeks.
That's exciting. I mean, I didn't know that you'd be that near to it. It was my understanding that I was probably going to have to change countries before I could use it. But that's reassuring. I have to think though as an American about tax treatment, and I don't know if this is something that either James or Roy would want to touch on. But I'm thinking in my own mind. I know how our IRS is very covetous of any profits, any gains you make anywhere. So if I'm owning gold, and I take that gold, and the gold starts to rise in value, is there going to be some tax issue? Is that something that I just need to talk to my accountant about?
Yeah. So this is a great point, and I'm going to explain it in a few different ways. So let's just look at it mathematically. We have built a technology which, over time, automatically calculates your gains and losses, your delta, in your local tax currency. So when you sign up for an account at Bitgold, one of the last steps requires you to select a tax currency. And that tax currency can actually be changed later on. It's a very hard thing to do, to build, because what we're doing is we're recording the value of the transaction at each moment that transaction is occurring, whether you're receiving gold or sending gold, but we're recording it in the notional value of your tax currency. And then we're just taking that number and saving it. And at the end of the year, you export a CSV or an Excel file, and you add it into your TurboTax or H&R Block or whatever you use, your accountant, and it just becomes a line item on your 1099 if you remember like the old way you would do it in brokerage firms. So before brokerage firms became sophisticated and issued 1099s, I mean, I'm young, but I remember having a brokerage account when I had to get I had to literally export it out and add it into TurboTax and all that stuff. So that's one thing. On the question of why would someone want to use gold because it's generating gains, here's a little brain exercise. There used to be this thing called a risk-free rate of interest. Mm-hmm. And we used to deposit money at banks and earn interest.
Yes.
And then that interest, which was a delta above the initial deposit, would get taxed.
Yes.
And that amount would be, you get a 1099 and you take that amount, you'd add it to your adjusted gross income. And that would be your revenue. And so it's the same thing with gold. If you happen to use gold throughout the year and it generates a net gain in your tax currency, well, that delta has to be added. And if you're a merchant and you've got costs against that, then you will add those in and, we'll adjust your net income. If you have received gold as payment without, showing or demonstrating, any cost against it, then the entirety of that payment, again, it depends if it's a good or a service, and by no means are we giving tax advice, but the bottom line is this. If you happen to earn a positive delta, a gain on using gold, whatever that gain is divided by your gold holdings, whatever rate that is, that's no different than earning interest on gold. That's the way I look at it in a world that's denominated in fiat when you're a taxpayer that's paying in fiat. And so I think it's a very important point. Like, there's no tax friction in using gold. The only friction that existed was the technological friction, the ability to do it effectively. And with our platform, you can finally do it effectively. And, Josh and I, before we established Bitgold, this was one of the last kind of things that we needed to tick off internally. Sure. Just like deciding, do we want to do this or not? And so we took Josh's secretary's annual salary. And what we did was we imagined that, over a 10-year period, we modeled this out. We built a model. She would take her salary every month and basically pay the tax on her salary and then deposit that amount into Bitgold and then spend on the Bitgold debit card her basic requirements every month, with the difference, the surplus being her savings. And after about, 10, 15, 20, 30 years in the model, obviously we know what gold has done. You're still about 5 to 10 times better off than if you had done that with fiat. Yeah, even after, if you're the most, if you're a good Samaritan citizen, write a check at the end of the year you would still be better off. And that's the power of gold's compounding effect against fiat. And by the way, that's in US dollars, right? That's arguably the best fiat out there.
The strongest one, yeah.
Yeah, the strongest one. If you were to repeat that exercise in euros or in Japanese yen or in Indian rupees or in Brazilian reals, Australian dollars, you'd be way better off. So this idea that, there's a friction in dealing with gold is incorrect. It's no different than when we used to get paid interest.
Well, that's really amazing. So you've got this platform, you've got this technology built into your model now, so that you can handle this issue. Is that something that's ready? That is complete now, ready to go?
Yeah, that was a core feature. When we met regulators and we said we want to launch this service, the two things they said to us was, we don't object to the service, but we want to see two things. We want to see bank grade, know your customer, and anti-money laundering policies. And that means that we do a full physical on you when you sign up, but we do it very quickly. We do it very quickly, and with technology, we're able to do it within minutes. But the second thing they wanted us to do was promote tax compliance. And so we said, sure, we're going to do that, and here's how we're going to do it. They didn't want us to create a system where people could, build up gains and then at the end of the year say, well, I don't know how to report that gain. Bitgold doesn't tell me,
Yeah. Okay, very good. Well, let's move on. I want to get James into the discussion here. James, you've spent a lot of time and energy forming GoldMoney. I don't know how long ago that you and I first met in New York, and you were introducing this story of GoldMoney to me. What did you see in Bitgold and its management that convinced you a merger was in the best interest of GoldMoney, of your shareholders, you being probably the largest one? What did you see in Bitgold that really convinced you it was in your best interest, and not only of the shareholders, but of the clients of GoldMoney?
Yeah, we're always focusing on what we can do to improve the experience of our customers. And when you're doing a transaction like this, the first thing you look at is the management team of the other company.
Sure.
And Roy and his team, he's assembled a fantastic team in all key areas, but particularly IT. And when you're involved in online commerce, IT is the most important element of it all. And the way we saw it from a GoldMoney shareholder point of view is we're bringing two companies together, very complementary to one another, with the net result that we view it as a 1 + 1 = 3 transaction. In other words, the sum of the two is greater than the individual parts individually. So I think that GoldMoney customers will notice some significant enhancements in their experience with GoldMoney, plus new products and services that are going to be made available as a consequence of bringing the two companies together.
Roy, can you explain how Bitgold will derive its income? How's it going to make money? And I'm thinking in terms of being a potential shareholder of Bitgold. How is it going to make money?
Yeah, so Bitgold will make money earning small transaction fees on every transaction. When we looked at gold and gold ownership in general, we felt that the storage fee was a potential inhibitor for new owners, people that want to have very small deposits. So we eat that up. We underwrite that. That's a cost that's borne on the operational entity, not the segregated client account. But then we earn a 1% fee essentially when you deposit gold or when you redeem gold from the platform. And that's a fee that's earned within this exchange that we've built where there's counterparties, LBMA, COMEX counterparties that feed bid and asks all the time. And so we always take the best bidder offer. We add a 1% fee, and then we distribute that price to the platform. That's the price that you execute a deposit or a redemption in. Mm-hmm. For merchants, we will charge a 2% fee to process invoices and credit cards. So we actually charge you less than what a normal credit card company charges you. It's usually 2.5 or 3% plus 30 cents. And then you're able to actually generate a credit of gold.
Okay, so you will be accepting merchant accounts, and do you have any sense of what size those merchants might be? They're going to be can they be anybody that applies, and then what? You'll probably have a fairly rigorous process to go through, I suppose, like merchant accounts are always subjected to.
Yeah, no. So we see this as being, we're emulating everything that PayPal's done. And so anyone can become a merchant account. It will require an extra step in terms of KYC, know your customer, but I don't suspect it'll take more than a few minutes as well. I mean, there'll have to be an approval on our side, an underwriting department. But the way we're building it is it's going to look and feel very similar to Stripe or Shopify or Square. It's a checkout button, and you can install it on your website or on your eBay listing. And the purchaser is essentially able to click on that button. If they have a Bitgold account, great. They just sign in and check out. If they don't, they go through an accelerated sign-up. Maybe takes them 5 minutes, and then they're able to complete the transaction. Mm-hmm. Now, I want to touch on something. What's the point of using gold, right? Like there's a lot of questions there. Well, why would you use gold? For people that understand gold and want exposure to gold, that's a good use case. But what if I told you that there's an economic reason to use gold, even if both sides, the merchant and the purchaser, couldn't care less about owning gold? What if I told you that you could reduce transaction costs by having a payments network backed by gold as opposed to currency? And then that cost really scales when you get into FX transactions with different FX spreads or cross-border payments. Uh-huh. And so I think that's really the crux of what we discovered, Josh and I, when we established this idea for Bitgold, was if you could build a settlement system using one thing, gold in this case, mm-hmm. which is very inexpensive to store, mm-hmm. And build sort of a SWIFT system, you now have a scenario where you can move large amounts of value instantly for essentially free, no cost. It doesn't cost us anything to move it. We charge a fee, but it's just a database movement. Mm-hmm. The metal itself is always staying in the vault. Mm-hmm. And so, if you look at, say, a scenario where you have a grocery store owner in Japan and they're buying a monthly shipment of tomatoes from a farmer in India. Right now, the way that they're doing that transaction is the Japanese grocer has to remit Japanese yen through a USD cross, because that's the most liquid one, JPY USD. That's going through some Japanese bank. It goes to the Indian bank, which receives it in USD. The Indian bank converts it from USD to Indian rupee, and then the Indian guy can now pay his workers and continue the next month. That whole process would take both sides 3 days, and it would likely cost them, if they're really, really, high volume, then it's probably a 2 to 3% thing. But it could be as high as 5 to 9%, depending on what they're using. And let's just say, for argument's sake, it was even 1 or 2%. If they both use gold as kind of the intermediary ledger, so on our platform, what they'd have is they'd have gold in the middle. One guy would be depositing Japanese yen, and then the gold would be converted. So the Japanese yen would be converted to gold, converted back to Indian rupee. That transaction would cost each side 1%. And the volatility of gold in those respective currencies, say they just did an instant transaction, we can settle trades instantly. So if they did that, the second we received the Japanese yen, we would convert it into gold and then subsequently convert it into rupees. And that whole transaction would cost, we would earn 2% as a company, but it would cost each side 1%, and there'd be no counterparty risk. That's really the power of this idea. And people will only understand that if they understand the volatility of gold over short durations, which is basically non-existent.
All right. Well, there's so much more to talk about, and we only have 3 minutes left, my engineer is telling me. So, James, I want to ask you, we've hardly heard from you, but, there was a critic out there, actually a competitor of GoldMoney, that was trying to mention all kinds of reasons why you might better take your money away from GoldMoney and put it into his shop. But one of the things he mentioned that did make some sense to me on the surface was Gresham's law. The notion that bad money chases good money out of circulation. Why would I want to take my good money, gold, and use it to pay for transactions when I can take my cheap fiat money, my worthless stuff, and pay for those same transactions? I think actually Roy answered it in part with the example.
I basically just disputed that with one use case.
Exactly. Yeah. So, but James, I know you've given a lot of thought to Gresham's law. You've written about it, talked about it in the past. The reason, the reason you want to own gold. But do you have any comments on that?
Yeah, I think Roy explained it beautifully. It basically comes down to efficiency and lower costs. Merchants don't really care about Gresham's law. They just care about saving money and doing things quickly and safely, and gold offers that opportunity. So I think the interesting thing, Jay, is that the technology that is available today could reverse Gresham's law. In other words, good money drives out bad, because good money, when it's circulating as digital gold currency, is much cheaper, much safer, and much more convenient than dealing in any old fiat currencies.
Well, you guys have put a smile on.
It's important. Gresham's law is something that was coined in I think 1850s or something, before
1480s.
Yeah, well, that was Thomas Gresham, I think. Yeah, he was, but I think it was the other guy that named the law. Either way, this was before the internet, before copper wires, before it's very important to have an imagination and expand the category. And I think praise by name, criticize by category. We don't really care what these competitors are saying. At this moment, we're sitting on more capital than any competitor. Okay. We have almost a $200 million market cap. We're backed by some of the world's wealthiest families and wealthiest investors. When by the end of this summer, when we roll out, and it's very important people understand, GoldMoney is separate from Bitgold. Bitgold is a payments company. Think of it like a Visa or a MasterCard.
All right. Unfortunately, Roy and James, we're out of time. My engineer is telling me. But what I'd like to do after we shut off from the show is get a couple of more remarks, and I'm going to put it on my website so people can listen to it. I wanted to ask you about security and maybe further clarification on Gresham's law and some of these things. All I can say is both of you guys have brought a great big smile to my face in an otherwise depressed gold market. So thank you very much for being with us today. It's been great talking to you, and we want to pick up on this as soon as we can.